Hey traders, it's 3:45 in Chicago. We are on the 7th of September. Let's jump and take a look at the charts. Today was a little bit of a better day in the markets. You could see Dow Jones was up about 1.4%, SP500 almost 2%, Nasdaq 2.1%, small caps, mid caps. It was pretty much a rally across the board. The sentiment of the market was extremely weak yesterday, extremely weak and very negative. Basically, this market was bombarded with negative news since last week. Natural gas, Putin gas line, European banks, chaos in Europe, things of that nature. They were all over the place, and you could just kind of feel it in in traders' comments all over. And I've talked about this yesterday as well. So we were pretty much prone for a pretty decent rally, and that kind of came today. It was maybe a little bit earlier than I would expect it. Maybe I would have expected it tomorrow with the ECB, but we'll take it, and we're noticing a little bit of a return to a risk-on mode. Now, what I don't like about this rally is the fact that utilities here are still at the forefront of this recovery, and that's not necessarily a positive sign. I'm going to take it. I'm going to kind of sweep it under the rug here, but it's not. You don't want utilities. You want utilities to be towards the bottom of the pack. To be a return to risk. It's not a bad sign, but it is something that's just slightly concerning. Now, XLY was fine. Then you get materials communication services. XLK technology did not do a big day today. So you can notice in Apple and some of the other ones, they didn't really rally a whole lot. And they were only up about 1.6 on the day. Energy got sold off. Consumer staples here, defense also was, a little bit towards the middle of the pack. So a pretty mixed, broad rally, I would say, overall. And you could see, they kind of sold them off yesterday. They stabilized. And then today there was not many downticks. They continued to kind of rally throughout the day. And then Lionel Brainerd, I think it's her name, she came on and she had a couple of hawkish comments. And then one of the comments, I think, was a little bit taken by the markets to be maybe a like a positive sign. I've shown some charts into the room also from Sentiment Trader regarding, the amount of puts that big traders, now I'm not talking retail traders, big institutional traders have placed on the markets on the bearish side, and how much money they've spent, billions of dollars in this put coverage and put protection, being afraid of this market crash. We'll see, but, those are usually not necessarily signs that that's what's going to happen. The market has a way of working out on the other side of this massive imbalances when it comes to put and call buying. So just kind of pay attention to that. But that's something that we haven't seen since 2008 and 2016, and it's quite a lot. I mean, if you look at the first sell-off that ended up in June, July. In June, there was there were a lot of small traders buying puts, and kind of that got thrown away, and we had this massive 20% rally, right? So when sentiment shifts over to one side, nothing really matters other than the positioning of the market, okay? And that's where the squeezes come on, and then emotions and fear take over, and then people are forced to cover, and then you're getting these bounces. Now, we're not out of the woods yet, obviously. Pretty good size rally today. We'll see if they're going to be able to continue, but what I did like was the fact that the bonds sold off. I mean, the bonds rallied and the yield sold off. So you can see 2.1% on the 30-year, 2.2 on the 10, 2.4 on the 5. So that's encouraging because, and this came along a dollar that was selling quite well from the top. So you could see that was a big spike this morning. I saw people posting, oh my goodness, this was early this morning, dollars making new highs. That's not sustained. Like, when people tweet the shit like that, it doesn't work. Every time that happens, it's like, take the other side, 9 out of 10, you'll be able to profit out of those comments. So anyway, we'll see if this is a full reversal on. It's just the initial sign that something could happen in the dollar. But, this one has had a couple of retracements before, and then he ended up moving higher. So I don't want to put everything on it, but you can see even in here that you have a 1, 2, 3, 4, and 5. So you can see just on this little chart, you can see 5 ways, okay, on the dollar. This is UUP on the downside. So pay attention to this because maybe a three-way setback would lead to a further rally to the downside. Commodities took it on the chin also, with the exception of gold and silver that rallied. But commodity index, and I was talking about this in the video that I've done Saturday for YouTube, DBC, it's a short. DBE, it's a short. Energy, commodity, stuff like that, it's not. I mean, most of them were in a B wave correction, and then they're pushing lower. Oil, this is USO, so you're at 67. I don't know. I think we've broken below. Have we broken below 80 on the crude? I gotta check that. But again, just a straight sell-off, and that actually was the first sign that these markets are a little bit in trouble. Because it had a little bit of a fake break, and then it broke lower below that. And at the same time as the dollar was making new highs, oil was starting to come lower, the sentiment was starting to shift to the upside in the equities, then along with the dollar, and then that led to this kind of decent rally today. Natural gas in here continues to act weak. We've caught this trade really well, so this is another kind of sign of this commodity kind of complex coming back down. Crypto was pretty much flat, but it turned up and rallied. And as I'm talking right now, Bitcoin is rallying, and it's probably going to find resistance towards 19.5, and I'll do a video on it here shortly. But this is something that I warned on earlier this morning when I've said that the breakout of the triangle is a terminal move, and that those moves usually reverse and you can go back up higher. And if you pass 19.5, you're probably going to squeeze to 22,000, and then we'll see what's going to happen from there. But that's kind of my read on Bitcoin at the moment, because if you're getting a squeeze in the equities to the upside, you want to see this kind of follow through from Bitcoin. And another thing that I mentioned was what happened with the fear and greed index, 24, with Bitcoin about to make new lows. You're sitting at 24. Almost like it was this almost like this indifference in kind of what happens to the price. Everybody kind of assumed, we're going to break lower, it's going to be like 15, 16,000, and we're going to push lower, and it wasn't really into the price, right? You would expect that to be maybe at 10 or at 6 or at 15 or something like that, right? But it was kind of 24. So that's an interesting sentiment gauge right there, that people are very complacent and accepted of the fact that, the markets are going to sell off. Not just Bitcoin, but everything else. It's a done deal, and it's not. That's not how that works. So, here we are rallying a little bit higher. We'll see how it's going to be. I mean, Ethereum also squeezing up towards 1660 in here. And then, look at the leaders. You have 10, Clean Energy, ARKG, some GDX, junior miners. So you don't see a lot of tech necessarily here. In the industry ETFs, you don't even see XLK in here, right? You see, XRT, XHB, IBB, so kind of the risky parts of the market kind of rallying up today. All right, let's quickly take a look at the price action. So NASDAQ, after kind of making this low yesterday, it kind of pushed back up higher. Could very well be a flat in ABC for a wave A, ABC for a wave B, and then up in 5 waves for a C wave. And this could be a flat A, B, up in C, and then you're crashing lower. It's very possible. I'm not going to argue against that necessarily, but we did get a pretty good reaction. We wanted to see a continuation out of here, and I was looking at this level as being the first indicator, but we're still below some key moving averages. We're still below this kind of more larger trend line. So there's stuff to fight to the upside here to kind of put some more meat on the bone of this rally. We'll see if that's going to happen, right? The bears can continue to still have the upper hand as long as you're below some of these key swing highs, below the moving averages. They can still argue that this is still in their favor. The S&P 500, right, after a drop yesterday, you're coming back and you're rallying back up higher. 50-day moving average, if we're managing to get all the way up there, will probably offer resistance. And we'll see what the comments from ECB will be tomorrow. And then, next week, we're going to have the inflation data. Next week, Friday, it's a major quarterly, it's not a monthly, it's a quarterly expiration. And no, actually, the monthlies are in there as well, I think. So, you got to kind of check that out. And that's going to be probably a lot of volatility going into the next week. I don't think it's the monthlies, because the monthlies are usually on the last Friday, on the last Friday of the month, and I'm going to double check on that, and I'll just post it in the room. But anyway, pretty decent rally out of there. Let's see here, Dow Jones with a pretty good rally, Russell also 2% in here. Then you got to look at the bonds, from the bottom of the channel, pretty nice little rally all the way up here. Now, I'm looking at the RSI, which you don't see in here, which is below. There's a big divergence between this low and the RSI on the 30-year, which can tell me that this rally here could have legs. It's coming from a place of a double bottom or a double top. Remember, I showed you the chart yesterday with the 30-year breaking to new highs. Okay, and here we are, just as quickly as we broke to new highs, we're retreating below those, and we're coming lower on the yields, higher in the bonds here. So very interesting what's going to happen, because if this continues, right, and rates are coming lower, that should continue to fuel the stock market to the upside a little bit more. So that's why I'm always keeping an eye on what happens to bonds, and I wish you do the same. Here is the 10-year as well, coming up towards the top of the trend line. This move higher, yields on the 10-year move lower. Here is the 10-year yields, 327. Went up to 336, 349 was the high back from whenever 614, 615. And, we're coming a little bit lower, but I need to see this channel kind of get taken out, maybe climb all the way to 116.25, then push back, create almost like a reversal pattern, and then see if we can accelerate higher from there. But very important what's happening in the bonds. Gold in here, a little bit of a double bottom. I'm not big into the gold market right now. I just don't care about it too much. So it just needs to do whatever, but I'm not, the larger picture is still very, very murky, and I'm not having a good read on it. I don't feel like I'm connected to the gold market as I'm connected to the equities, to Bitcoin, and to bonds, and to commodities and stuff like that. Oil is still giving me kind of jitters and secure feelings in here when I look at the gold market. So when you don't feel a market, it's not. I don't feel I can analyze it that well. Then here is oil, right? So we broke 81.65. Big rejection out of there. The crossover happens right here. We're breaking lower. Again, let's think a little bit about the sentiment. It could be that we're running maybe, a little bit extended here, or maybe we're just starting. This could be a much larger crash towards 60. But remember, lots of people were very bullish oil and still are on energy and oil and this big story. And, this market is shaking you out. This market is shaking people out from it. So we'll see. So far, you're below, a lot of these moving averages, which could mean a very large reversal in trend. We might get a bit of a rally higher, and then we'll see what happens there. But it's, this kind of continues to be a weak market on the oil. Copper, not much in there at the moment. So here is Bitcoin kind of reversing. And on the futures, we made a new low below these levels, So, based on this price action, you have made a new low. You can still look at this as a 1, 2, 3, 4, and 5. And then here we are. Markets just closed on the futures, but we're closing at about 19,310. So just below this resistance right there. If we can climb back above, we're probably going to find a little resistance right here at the at the converging lines from the triangle, maybe a little bit of a pullback, and then I want them to see if they can squeeze it back up here towards 21.5, 22, right up there. That's kind of would be an ideal place for it. But this did look like a triangle, so you can see wave 1, wave 2, wave 3, triangling 4 down in 5. Right, so pretty textbook decline. It could be wave 5 of a larger sequence, or wave. As Rick said, maybe wave C of a 335 structure, although it's very, very long for a C wave. But it's just, they both kind of work out. I'll talk about Bitcoin here shortly. So, here is Euro, right? Started to climb back up higher. I talked about the sentiment on here as well. Still very early. We need to see a lot more from this. But what I'm going to say this, if this market is starting to turn, okay, the rallies out of here could be very sharp, because if this market is already ultra bearish and people start to cover and start to realize that no, the European story, it's not going to be negative for euro and for stocks and all that stuff, right? Then when everybody tries to get out, this thing can squeeze very, very quickly, you know, all the way up to here to 104, 106, 107. You know, but it's just a little blip on the chart, right? We're still in a big downtrend. Everything kind of points lower. The divergence is very present now between this swing low and this swing low in the euro, just like you're talking about in the dollar. So, you know, again, before they can rally, they have to stop going down, and this is signs that it is kind of slowing down a little bit. It almost looks like an ending diagonal, you know, 1, 2, 3, 4, and 5. You see it? Okay, so 1, 2, 3, 4 ending diagonal and 5. I don't have to count in here. I can just kind of see it. You know, here's your wave 1, wave 2, wave 3, wave 4, and wave 5. So this could be a terminal move. Just kind of keep that in mind. Here is VIX crashing from 27, right, that I was talking, you know, with all this market negativity and all that. VIX wasn't able to rally a lot higher, and it should have been already maybe by 30 if there was that much fear, you know, into the price or anything like that. But this never really confirmed the price action, and it pushed lower. So that's kind of where we are. Natural gas, it's at 785. It was a little bit of a movie. I don't know what happened in here, but I was watching the market, and this thing was just kind of climbing up and down, like, you know, 40 cents at the time. And I'm like, what the hell is going on with nat gas? And then they kind of stabilized it. There were probably some orders getting flushed, and then you know, we kind of closed lower. This looks like it's a 1, 2, 1, 2, 3, 4, 5, 4, 5. So there might be still lower to go in natural gas. I think eventually you might get all the way back here towards 6. But this was a pretty good trade based on a head and shoulder reversal formation of this trend, and you're pushing lower. And once you get through the meat of the move, you know, you might leave a little piece to kind of continue, but it's time to pack up and just kind of go home. So anyway, this is what I'm seeing in price. I'm not going to go over the counting charts because I've explained you know, stuff pretty well on here already. But if you have any questions, guys, let me know. I'm curious, you know, definitely how we're gonna you know, continue into tomorrow, and what the markets will do overnight. We're probably going to get a bit of a sell back, right? And depending on how deep it is, you don't want it to get too deep. You want it to be a little bit of a correction, a bit of a pushback, and then, you know, something like this maybe, you know, and then you can continue to push higher, because if this was an important low, then we should not break below it. Okay, we should continue to just kind of go back a little bit and then start to build an uptrend and push higher. So with that being said, I'm going to close this off, and I'll see you on the Bitcoin video next. Bye-bye.